Hello all. In this session we are going to see how to set off the unabsorbed depreciation, current year business losses, previous year business losses, uh, uh, previous year unabsorbed depreciation. All those things we are going to learn as in this session. Now this problem I have taken from page number 11.45, problem number 8. All of you use the current edition textbook exclusively for income tax law and practice. Don't use the old edition textbook because budgets are being updated on annual basis. Provisions also will be changing to some extent on an yearly basis. In such a situation, so all of you must have to use only the current edition textbook rather than using previous year textbook. Fine. Now, from the following information of a businessman, compute the gross total income. Income from house property 2 lakhs, business loss 40,000, current year depreciation 5,000, business loss of preceding years 40,000, unabsorbed depreciation of preceding years 20,000, short term capital loss 10,000, long term capital gain 30,000. Now, see here, first you have to set off the current year business loss. Step 1, setting up of current year business loss. Step 2, setting up of current year depreciation. After that, step 3, setting up of unabsorbed depreciation of the previous year. That's all. So preceding year business losses or previous year business losses should have to be carried forward for the subsequent year, and then you have to set it off only with the business income. As far as this particular problem is concerned, business income is not there, right? So you cannot set off the previous year business loss as far as this particular problem is concerned. Now, you just have a look at the question and take the screenshot of it. Let us move on to the problem. Now, actually, computation of gross total income for the assessment year 2025-26. Now, income from house property. So, actually, as far as house property is concerned, income from house property within bracket, if they have given non-computed or uncomputed means, then only you have to deduct the gross income from the, you have to deduct the standard deduction under section 24, 30% of the net annual value from the gross income, and then you have to arrive at the net income from house property. Income from house property, besides this, they have not given anything, right? So in such a situation, you have to understand that it is already computed. Okay. 2 lakhs less income from house property computed 2 lakhs less. First, as I told, step 1, you have to set off the current year business loss of 40,000. After that, current year depreciation 5,000. Step 3, unabsorbed depreciation of the preceding year 20,000. 40,000 plus 5,000 plus 20,000, 65,000 you have to deduct from 2 lakhs rupees. You will be arriving at 1,35,000. Okay. Here business loss you are setting against the house property income. Okay, business loss can be set off against house property income, capital gain income, other sources income also other than the casual income and the salary income. Okay. Now, short term capital loss can be set off either against the short term capital gain or long term capital gain, as I told earlier. So now short term capital loss 10,000 can be set off against the long term capital gain. Net long term capital gain will be 20,000. 1,35,000 plus 20,000 is 1,55,000. So preceding year business loss cannot be used here. Here there is no business income, right? So as far as this particular problem is concerned, there is only business loss, right, that we have set off against the house property income, right? So there is no more business income. So you cannot set off the preceding year business loss against any income. So you have to carry forward, and then you have to finally set off against the same head of income, that is the business income only. Hope I made you clear. Just take a screenshot. Thank you. Like this channel and subscribe the same. Thank you.